I'm Adam Willems, lead reporter at the Financial Revolutionist.
Hi, Adam. Nice to meet you. I'm Katelyn. I lead strategy and business development at Discover Financial Services focusing on payment services.
It is a pleasure to have you. Thank you.
Likewise.
So, Discover recently released its Fintech State of the Union. I'm wondering if you could sort of speak more about that and the takeaways that you find in the report.
Sure. So the Fintech State of the Union is a study that we do annually. It's designed to be a pulse check on the ecosystem, right? The payments ecosystem is under constant development. And so we look towards the data and the insights that are derived from that survey to kind of inform where we should focus and what kind of partnerships we should focus on. And so it's a global study. And we bring perspectives in from consumers, from kind of fintech vendors that serve the space, and fintech issuers and banks in the category. So wide range, and also from it's a global perspective, right? We do survey respondents around the world to kind of get a global pulse check.
Understood. Yeah. Are there any takeaways from it that caught you off guard or surprised you?
The study affirmed a lot of some of the things that we've been feeling over the past year, right? This is the third year we've done the study, and so in between, right, we kind of based on the activity that we're experiencing, I always kind of wonder if this is something that's kind of something that like we can have pattern recognition from. The study really affirmed a lot of things. I'll give you some examples.
Sure. Yeah.
I think that the tailwinds for payments are still really strong, right? So consumer preferences, while they've changed a lot, there's still a lot of demand around digital payments. So for the first time, a majority of consumers either made a digital purchase or intend to spend discretionary spend through a digital form of payment, which, I mean, it's a norm here. It's here to stay. The second thing that was kind of a clear observation was there's just been a lot of technology advancements that have just lowered the barriers to entry to kind of play in this space, right? Cloud-based infrastructure, APIs, all that stuff. It's simpler and more straightforward to get kind of solutions into consumers' hands and into customers' hands, including banks, vendors, and kind of processors, the whole set of infrastructure. But the other thing that we kind of observed, which wasn't a surprise, was also affirmed, was that there are some headwinds around the cost to scale. So, cost of capital has increased. It's more difficult to secure funding, right? And that's all relative to 2019, kind of 2020 pre-pandemic levels, which is just this normalized, right? But investing or funds are harder to come by, and so that just means that I think folks are left, kind of trying to go back to their option set and figure out what their strategy is going to be to navigate what I think is like the next chapter of fintech or the sector. So not sure what it'll hold, but that's kind of what we observed.
So things like reducing debt, wealth building, and so forth. Is that what you mean?
I think it means from a cost of capital and from a funding standpoint.
Sure. Yes.
The fintechs are where they were that are easily able to acquire funds to operate, right? So maybe could get funding for novel ideas or that were really early stage. That's becoming more difficult.
Yeah.
And so it's kind of forcing fintechs to focus on business model and kind of what the key levers are there to go from fast growth at all costs to smart growth based off a cost structure that is sustainable.
Right.
And that's what I mean. Like, so if there are ideas that are there, right, that those are doing well, and those are where the fintechs are really trying to hunker down and succeed.
Yes, understood. Yeah, I wasn't sure whether you meant that you would see sort of fintechs writ large move towards prioritizing something like, helping consumers reduce debt. But it sounds as though it's also just about sort of having smarter business models that are about unit economics rather than growth.
More the latter. I do think with the open banking proposal that came out last week, there will be some renewed vigor in which is open banking was a hotter kind of area that folks were investing in, mainly because of the global perspective, right? That's where it's been kind of a lot of activity there. Outside the U.S., I think in the U.S., we're going to continue to see that kind of come to the forefront as an area that fintechs are interested in. It will have kind of focus there, right? And I think that, in turn, to your point, will be driving a lot of the how do we create better experiences around financial services more broadly,
Right.
to do things like that, to serve, different segments
Right.
of the market.
Right. I'd love to hear more sort of from a strategic perspective. You mentioned that the report has affirmed a lot of sort of, these gut feelings or sort of intuition that you've had. How much do you respond to sort of that almost more like empirical validation versus really start getting the ball rolling based off of just what your intuition is?
So for Discover,
Mm-hmm.
we use the empirical data and the facts to corroborate what we're experiencing through one or two customers. We start to see a pattern emerge.
Okay.
And the data helps us start to coalesce around an idea or get behind an idea a little bit faster.
Mm-hmm.
So, when you have, there's the voice of customer, which is great, right? It's a great qualitative point of view. But when you have data to kind of inform, yes, there is either opportunity here, or you should kind of reduce your option. There's only so many paths you can take. It helps you quickly narrow on what street you should take. It's really helpful in that regard, right? Because the industry moves really fast.
Right.
And the sooner you can pick up data, the sooner you can make decisions. And even then, like the Fintech State of the Union, we announced a lot of the findings now. And even then, from when we did this, the study took place 6 months ago, the environment has totally changed, right? The ecosystem has totally changed, right? So you need a combination of commercial related, external, like day-to-day experiences and data to help you kind of move quickly. And we're wondering how you can do that more often.
Right.
So
When given as you mentioned, sort of fintech is in this state of flux, does a larger player like Discover approach that as an opportunity for acquisitions, for example?
Can you be more specific? Are you thinking about?
Partially I'm thinking about, when you go to a conference like Money 2020, you have, a lot of relatively early stage players that either you want to partner with or you want to acquire down the road. And I'm sort of interested in what's the lens that you approach something like Money 2020 with.
So the Money 2020 as a conference is a great place to have really thought-provoking conversations, right? We all are, for the better part of a year, out chasing our strategies and kind of the commercial plans. And it's a great time of year to have everyone kind of take a moment to pause and talk with others in the industry and go back to the voice of customer. Are you hearing what I'm hearing?
Right.
Are you feeling what I'm feeling? And as another, kind of data set to say, should we be working together more? Should we be focusing on solving some really hard problems together? Because if you're having experiencing the problem, we're having experienced the same problem, how do we come together to create aligned incentives? And so we're always open to partnering, right? Whatever form that takes, that is something that's critical for us as a network. You only add scale to a network by adding more partners to it, right? And we tend to be flexible, collaborative, like we want to leverage our assets maybe in some other ways that others might not. And so that's really interesting to a lot of folks in the ecosystem, especially right now, right? Where I think you do need to partner to think through some hard problems and to face some of the headwinds that I was talking about earlier.
Totally. So what do you think are the problems that you would hope to tackle with fintech partners in the coming year?
Let me think about that one. So I think there are a couple of areas that we're thinking about. One is frictionless transaction experiences, and that could mean anything from, delivering a transparent payment experience through, walking into a store and walking out of a store, right? Something that's directly focused on a consumer and a merchant, for example, in that setting, and then translating that into an omni-channel or a physical experience. There's a lot that we can do that consumers are used to, and how do you translate that to non-everyday spend or non-entertainment experiences to make, you know, consumers stickier in those regards. So that's an area. Security is another, right? Because the more you push into an online or kind of a digital payment experience, there's the explosion of fraud and right more security challenges there. So we're thinking about that. And then again, tokenization, right? That is a key enabler and kind of key infrastructure component to making those things work
Right.
securely and seamlessly. So those are some of the areas we're looking at. And then we're also looking at modern, I would say, modern stack infrastructure providers, right? Some things that fintechs are nimble, modern tech stacks. They expect to kind of connect to existing providers easily, right? And we need to be able to do that, right? To be able to expose kind of our capabilities that way. And so we're looking at ways to make that easier. And that requires fintech enabler capabilities as well as servicing those fintechs.
Right. The first question is regarding real-time payments in FedNow. You mentioned sort of seeing like the canary in the coal mine through one or two clients and being able to sort of react and scale to that response relatively quickly. To what extent are instant payments sort of specifically through those two forms of infrastructure something that you're already sort of keeping on your radar or building around even?
As a payment network, right, we're always in tune with the many different payment use cases that exist, and they change all the time, right? And the number will grow, right? So we've been watching not only traditional, I guess what I would call traditional forms of payment, right? Card-based payments, what we do today, right? We pay attention to obviously things that affect that. We pay attention to alternative forms of payment, right? Because I think you can, as the ecosystem evolves, right, and going back to consumer preference, I think there's going to be increasing demand from a consumer standpoint on alternative forms of payment, whatever that means, right? They just want to transact seamlessly, easily. They don't want to think about it. They don't even want to have to like know that they're going through a payment transaction.
Right.
And so we're always evaluating, right, what those categories are and how you can enable them with the existing infrastructure that we do have, right? Because at the end of the day, we have a great merchant acceptance footprint. We have the infrastructure to move data around that way. And so, we do keep our eye on those things, and we do pay attention to them.
Right. And also, if we had this conversation 2 years ago, I probably would be asking you something about crypto payments or something. And so there's sort of a need to keep an eye on things, but also not overinvest if they sort of come and go.
Right. And the interesting thing is that while the payments ecosystem is always evolving, it does get back to basics, right? There is always the need to have a network in the middle of all of it, right? Because there's a merchant on one end, and there's a consumer with a bank behind them on the other, or some sort of financial institution, and you have to make those things work. So as a network, we're always trying to make sure that we're understanding how to facilitate the middle.
Right. Absolutely.
So.
And remain relevant at the same time.
Right.
Yeah. My last question is whether there are any questions I haven't asked that you feel like I should have.
No.
Great. Straightforward enough.
Yeah, awesome.